Close your eyes and imagine the global economy. What is the one thing that keeps it all moving? It is not gold. It is not even energy. It is the United States dollar. Think about this for a moment. Today, in April 2026, the world is more divided than ever. And yet, almost every major transaction, from oil in the Middle East to semiconductors in Taiwan, is settled in dollars. Why? How did a piece of paper, from a country with $34 trillion in debt, become the world's operating system? It began in 1944, Bretton Woods. While the world was in ruins, America was the fortress of production. The dollar became the gold standard. Even when Nixon took the dollar off gold in 1971, the power didn't fade. It evolved. It became the petrodollar. To buy energy, you needed dollars. To pay for global debt, you needed dollars. This created an infinite demand. America has the exorbitant privilege. They can print money, because the world is forced to buy it. It is the lender of last resort. When war breaks out, when a pandemic hits, when fear rules the market, investors do not run to growth. They run to the greenback. The dollar is not just a currency, it is the ultimate insurance policy for the human race. But for a long time, there was a rival. A quiet, humble, but incredibly strong rival. The Japanese yen. If we look back at the last 20 years of financial history, the yen was a miracle. Between 2000 and 2012, the yen was the safe haven of the world. Every time the global markets crashed, the yen went up. Why? Because Japan was the world's largest creditor nation. It had massive trade surpluses. Holding yen was like holding a shield. When the 2008 Lehman shock destroyed Wall Street, the yen skyrocketed. But then, the winds shifted. Japan entered a decade of negative interest rates, a desperate attempt to fight deflation, while the rest of the world began to raise interest rates to fight inflation. Japan stayed at zero. This created the Great Divergence. Think about the math. If you can earn 5% interest in dollars, but 0% in yen, where would you put your life savings? Exactly. Money poured out of Tokyo and into New York. The yen carry trade became a tidal wave. The safe haven myth cracked. By 2024 and 2025, we saw the yen hit 30-year lows. For the first time, the currency that was supposed to protect your wealth was the currency that was destroying it. The shield was broken, and the world had to find a new way to survive. So, here we are today, April 2026. The dollar is stronger than we have seen in a generation. But, is this the end of the yen? Not necessarily. We are seeing a massive shift in financial philosophy. Japanese investors, and even the Japanese public, have stopped waiting for the yen to recover its old status. Instead, they have learned to use the weak yen to buy global power. They are moving their wealth into global yield, into US technology giants, into global infrastructure. They are realizing that in 2026, wealth is not about which currency you hold, but which assets you own. As interest rates in Japan finally, slowly, begin to rise, we are seeing a normalization. The yen may never be the absolute shield it once was. It is now a strategic asset. The dollar is the sword, and the yen is the anchor. In this high inflation world, you cannot survive with just one. You must balance the safety of the dollar with the resilience of the yen. Understanding this balance is the key to surviving the next 20 years of history. The king is still on the throne. The dollar is supreme, but the survivors are the ones who know how to navigate the ocean between these two titans. Thank you for joining us and for listening to the heartbeat of the global market. Stay vigilant, stay informed. We will see you in the next deep dive.